Hi everyone. Good morning everyone.
Good morning, sir.
Good morning, sir.
Only two responded, rest others are just logged in, not active. Can everyone please respond? Good morning.
Good morning, sir.
Thanks, Shivani. Good morning.
Good morning, sir.
Good morning, Vijay.
Good morning, sir.
Morning. Akash, Jyoti Sinha, Rahul, Shivam, Shivani. Are you guys active? Can you guys hear me?
Yes, sir. We can hear you.
Shivam, Rahul, Jyoti.
Yes, sir. We can hear you.
Great, great. Okay. Hi everyone. I am Dinesh, and I will be the one who will be taking today's session. Uh, this is my discussion with Anshul. I guess all of you have some doubts or need some clarification on KYC, AML, uh, collateral management, and SBL, right?
Right, sir. However, we don't really have doubt. The thing is that we wanted a revision class maybe because concepts were not clear that much. So अभी इसकी वजह से doubt तो होना थोड़ा नहीं हो पाएंगे, sir. Yes.
Rest
So we
everything
wanted
is
to clear
clear.
the.
But apart from other level 1, 2, 3, rest everything is clear.
So level 3 is still pending because we are at level 2. And yes, level 1 is pretty much clear and level 2 is also clear uh, apart from this like 3 topics specifically.
Okay, because this KYC AML is part of your level 3. Just a minute. That is, no worries, we'll try to cover it. So, from level 2, if anyone can answer, what all topics have been covered so far for you guys? Can you please respond? What all topics have been covered as a part of level 2?
For asset management and corporate actions together with the trade life cycle. And what else? Is the and everything and reconciliation settlements. And yes, these 3 topics, SBL and
Reference data management,
reference data management. Yes,
that has been covered, right?
yes, that's that.
Was it covered by Amit?
No, sir. Anshul sir took that class.
Oh, answer.
Yes, sir.
So let me quickly just start with AML KYC. So guys, just one request. I need participation from the group in order to ensure that yes, I am audible to everyone. Whatever I'm just trying to just share, you all can hear me out, right? So you guys are saying the KYC AML part was covered, but you guys need a revision session, right?
Okay, sir.
Okay. So from the group, so as of now, what all have you understood when you talk about KYC AML? Can anybody help me out?
Uh, Sir, this side Akash, sir. Sir, KYC means basically know your customer. We have to check the proper documentation and the background of the customer so that the chances of risk can be mitigated. So that's why we done the KYC. And the anti-money AML is anti-money laundering, where with the help of that they translate the black money into white money. So that is called AML. Hello,
Yeah, sorry.
I'm I'm audible, sir.
Yes, you are. So I was asking, so as of now, so what is the understanding that you have when you hear the word KYC AML?
So KYC basically, what is my understanding about the KYC?
Right.
So KYC, sir, the KYC means know your customer basically, and for that you have to take proper documents from the customer, uh, whether he's living, what type of work he is doing, so that we can analyze about the customer, that who is the customer and what they do, so that we can mitigate the risk of fraudulent activities.
So we can say the due diligence part that we do. From
Yes,
KYC.
due diligence, sir. We can say that.
Anybody else? Thanks, Akash. Anybody else? Ajay, Rahul, Jyoti, Shivam, Shivani. What are you?
Uh,
What is your understanding for KYC and AML?
Okay, so I would like to just talk about the AML. AML is the process where we tend to just check whether the person is not politically exposed person, or maybe each and everything. As Akash said, okay, we used to take the documents of the customer. So that CDD, which we used to just do, and then the EDD2, where that's the enhanced due diligence, which we try to figure out whether the person is not into any kind of illegal activity, and what is the source of income, and each and everything, basically. And just to stop that money laundering thing, that we used to just have that separate department in the IB, that's a middle office. So yes.
Looks like there's two parts. AML, KYC, both.
Okay, and maybe in my understanding, KYC is equivalent to CDD, or it is a part of AML procedure. So where we take the documents and we try to know the customer, maybe detailed information we used to take from the customer and everything.
There is something that will add here, right? Okay. Anyone else from the group? Thanks,
Sir,
Shivani.
I want to add one more thing, sir. In the anti-money laundering, so KYC is a process where we collect the document of the customer and try to understand the source of funds. And in the AML, we are checking the transaction of the customer, that what are their transaction, they are doing heavy transaction or not, what number of transactions are there. So we check on the number of transactions and the amount of transactions, so that we can track that the money or the source of fund is genuine or not.
As well. Anyone else? We have Manish. Just join us. Is anyone else from the group? It's not name Rahul. Rahul, can you hear me?
Yes, sir. Yes, sir. I can hear you.
What do you understand by KYC AML?
Sir, AML actually it is for the organized for criminals which were.
Can you please come closer to the mic and just say that again?
We have some network issue.
I can hear you well now.
AML is basically contribution to the prevention of crime by reducing their incentive cycle and protect the integrity of the financial system by preventing use of by abuse by criminals and launderers.
Okay, and what is KYC?
KYC actually I'm not sure. Actually I have to revise about the KYC.
Okay, no worries. If I Shivam. Shivam, can you hear me?
Yes, sir. Yes, sir. Hello.
Yes, please. I hope you heard the question.
Yes, sir. KYC. Sir, KYC basically means to know your customer and know your client guidelines in the financial services required that the professional make an effort to verify the identify systems suitability and this involving the maintaining the business relationship. It's my point of view. Sir.
This involving the
Business relationship. Maintain the business relationship.
okay. Okay. And AML?
Sir, AML is sir. Sorry, sir.
I will move on to Jyoti. Nishan, what was the time for the call?
So 9 a.m.
Right. Nishan, you just joined us. Any reason for joining late? Nishan, can you hear me now? Nishant, Manish, guys, you guys just joined us. Any reason for joining late?
Hello.
Yeah, I'm not feeling well, and that's the reason why I joined late.
Okay, please take care. Okay. Anyone else would like to just add about KYC? I heard from Akash, I heard from Ilani, and I heard from Rahul. Same. Anyone else would like to talk about KYC?
The KYC is the process through which one entity identify its clients or its partner, employees. Basically, in KYC, entity adds the detail of the client. Basic detail, it can be for anti-money laundering is to restrict the money laundering.
Okay. Okay, now let me just quickly add whenever we talk about this KYC part, right? So first of all, yes, whenever we hear the word KYC, know your customer. Earlier, this initial term was used specifically in the banking sector. So wherever we are starting a new relation with a customer, right? Or any existing customer, if they are adding in another type of services. So as a part of the relationship and to identify the customer, we used to do this program KYC, right? But later on, keeping the risk in mind, this KYC program and the KYC part was launched for all, not only the banking sector, but yes, for most of the businesses, wherever the money is involved, right? So like just give you an example of our simple Paytm, right? Though I know that it is linked with our bank and with our bank, we already have done our KYC, but still, if we just open an account, now this has become mandatory uh, in order to ensure that we do the KYC with Paytm before we just start using it. Or maybe we can start using it, but after a certain period of time, they will ask for us to update our KYC. Otherwise, all our transaction, whatever we have done, right, post that will not be able to perform any further activity. The reason for the KYC program is to ensure that we know the people and the customer we are dealing with. Are these people or the customers, do they have their physical presence or are they just an artificial person, right? What sort of risk is involved when we are dealing with customers, right? What type of customers we are dealing with, what are the number of transactions these customers are doing, and what are the risks in order to deal with any customer. So that's where we do this program KYC, know your customer, right? And so whenever we talk about this KYC, so with basis different set of customers or different types of customers, the KYC, the need for KYC changes, right? So as somebody said, we perform the due diligence part, right? When we talk about this due diligence part, we just try to understand, okay, who are the customers that we're dealing with, of income, and etc. Right? Address, other information. So that is just the basic customer due diligence which we do for the retail customers. So whenever we are doing the basic due diligence for our customers, we call it the customer due diligence, in short, CDD, right? Now, as I said, there are different set of customers. So different set of customers involve different set of risk, right? And if we have different set of risk, then the requirement for KYC would also be differ for these set of customers or the members that we have, right? So that's how our EDD and PEP alag part that gets into the picture. Whenever we hear the word EDD, it's enhanced due diligence. That okay, so for the normal customer, they have limited number of transactions and the amount which they are getting in their salary or any other source of income is average, right? So that's where we do the CDD part, customer due diligence. But wherever we see any HNI is involved, any business is involved, right? Or any political person is involved. So that's where we have to perform EDD for those set of customers. Let me know so far if you understood before I proceed or if you have any questions.
Sir, I have a question. Like, what my understanding about CDD and EDD was that that's the initial thing which we used to do. Like CDD is the initial thing, and then if we find something maybe not right, then we used to move further to the EDD. Is it the case, or it's like both are the different thing altogether, and we don't really implement EDD on the retail customers? And is is it like that much specified, or what is this like?
Yes. So whenever we say CDD, right? Again, for customers like you and I, right? If we are salaried person, if we are doing our business, small business, right? And the number of transactions which we are doing, right? And the risk is when, as per bank, if they deal with us, right, they will feel the risk is low because it's all the source of income that is very much clear. It's all local business that we are doing. If you and I are doing business, so I know you are also the localist here and I'm also the localist here. So if we are doing any sort of transaction online, that can easily be tracked, right? And plus the number of transactions, the amount of transaction is low as per the below average, right? So for people like you and I, that for retail customers, it will be done as the customer due diligence. So CDD is performed for the some set of customers. So normally the retail customers, CDD is performed. Whenever you talk about EDD, okay, CDD, the basic part will always be done, right? Because the basic due diligence needs to be performed. But when we see the different type of customers, like any HNI, high net worth individual, right? For those set of customers, so as per the banking requirement, we see a risk is also high, right? These are HNIs and the risk is also high for these customers. So bank needs to ensure that they cover all set of risk. That's how they initiate the EDD, enhanced due diligence. So to answer to your question is, yeah, CDD and EDD is different. EDD is not performed for all the customers. And there are
Okay,
many
sir.
reasons to it.
Okay, sir. What if the retail customer they performs like high transactions, like maybe 1 million or something like that? Then what
So
we are
whenever
gonna
it
do?
happens, so that's where we were talking about SAR, suspicious activity report, right? So as a part of this AML activity, so all the banks ensure that okay, these are our retail customers, right? So we are good with them, and but in order to ensure the everyone's safety, they have an automated system, right? So wherein they have defined a set of limit that if any customer will perform any transaction more than this amount, that will fall under suspicious activity report. So let's say if any customer all of a sudden, let's say you are doing transaction on monthly basis, let's say 1 lakh or 2 lakh is getting credited in your account every month, right? And all of a sudden this turns out to be 20 lakhs, right? So now this will raise an alarm in the banking system in the suspicious activity report, which they do on a daily basis, right? It is all the system generated reports. They are bots implemented, right? So bots are checking all these parts. So whenever they will see any suspicious activity, you will get a call from your customer, from your bank. Sir, we have seen recently a transaction in your account for 20 lakhs. Do you know the source of this income? So they will ask basic questions to you. If you are able to answer and provide the information, then it is good, right? Otherwise, if this will repeat again, then your name will be added in the suspicious activity report that they will check and they will confirm now, since you have this heavy transactions with your account. So why don't you open your business account? You cannot have your account as your saving account. When it's a business account, current account you can open. So that's how they are also monitored. But whenever we talk about EDD, we normally say these people are HNIs. We normally say these people are coming with money, right? Like business corporates, right? And for those, we have to perform enhanced due diligence. That the basic due diligence will not help. We also need to perform enhanced due diligence. Does it answer your question now?
Yes, sir.
Thank you. Anybody from the group, do you have any questions so far before we proceed?
So,
So, sir, okay, you carry on. Yeah.
okay, so if an EDD transaction is red flag, so how can we monitor that, or how can we check that? Because they could do transactions more than $1 million. No?
Come again, please.
So EDD, when we do EDD for our HNIs, they do transactions might be more than for $1 million. So how can we raise if there is a suspicion over those transactions? So how can we
So
tackle?
for every set of customers, right? For every set of customers, like every group of customers, so there are limits assigned. So every bank, let's say for retail customers, yes, maximum per month, what we can do is 10 lakhs, let's assume, right? So 10 lakh is something that per month one person can have. If the transactions are going above that, yes, it is when the robots are created and when they are extracting the report, the bots are checking automatically everything. And they, when we just put that criteria in the system, that if there is any transaction which goes above this much limit, right? Please raise an alarm to us. So what they do is, let's say today my bot just extracted a report for, let's say, 1 million customers. And out of those 1 million customers, I saw there were 100 customers who did transactions for more than 10 lakhs or 1 million, right? Now, in order to, I will do a closely check for those 100 customers that where the payment came from. That can be a bank loan they have taken, right? That may be any sale of any other property or any other fixed asset, right? Or that can be any other lottery system or any friend they transferred, right? And that's how they identify that this seems to be a good transaction, and this is the transaction wherein they need to connect with the customer. That you have a saving account with us, and we see all of a sudden a high amount is transferred in your account or credited in your account. Can you please let us know the purpose of this transaction? That's how we do the check. And for EDD, you're saying, right? We already, the defined limit is already high. It is not like 1 million. The defined limit is already high. So this depends on the different countries, right? And the as per the rules and the regulations that the PDT customers should it be 5 million, 10 million, or more than that? Does it answer your question?
Yes, yes, it does. Thank you.
Any other question from the group before we proceed?
Yes, sir. So in the very initial stage, the CDD, let's find that one person with politically exposed wants to open one bank account, or else anybody who you have means have the capacity to have one high risk transaction or illegal transaction. So what are the criteria for us to means if this thing is on the customer, so that we can put him in the high risk category?
That's a good question. So whenever you open your bank account, right? So you will you will have to fill a form, right? A questionnaire form. Does anyone from your family works in any of the banking sector? Yes, no. Does anyone from you or your family belongs to the political party? Yes or no? If yes, then you will have to provide details. If no, then it's okay, right? So when you fill this form, when you open your account, that is the reason. So earlier, what used to happen? Um, Opening a bank account was not an easy task, right? They used to do all the checks, and then the bank used to open your account. Now, because earlier it used to take time because everything was they used to check manually. Now they have this central database with them. So if you will try to provide any false information, right? Or if you try to provide any other information, or let's say if you're providing the correct information, first, before I open your account, I will check whether or in which category you fall. Do you fall under um, this normal category, or do you fall under this PEP category, wherein you need normal CDD or you need enhanced CDD? So when you open your account, the type of business that you are into. So normally a bank asks, okay, are you a retired person? You will say, no, I'm not a retired person. I'm still working. What is your occupation? I am a businessman. Okay. Businessman, what is the annual income that you get? Right? The annual transaction. So that's how I will analyze whether I should put you whether you want to open your saving account or your current account. If it is your saving account, then obviously as a businessman, if your number of transactions are low, the amount crediting in your account is low, then I will allow you, right? But for the business person, I will always suggest you to have your current account. So that's how we analyze whether what type of person that we're dealing with, and as at the time of opening the account, this due diligence part is. Does it answer your question?
Yes, sir. Thank you.
Thank you. Any other question from the group? Thanks for asking questions, guys. Okay, I will. Yes, the basic purpose of this KYC is to first to know the people that a bank is going to deal with, right? Second, the main objective of this KYC is to uh, they prevent the banks for being used for the criminal activities, right? So if you know your customer, if you know their source of income, so you are cutting them in between, that the bank cannot be used, should not be used for any criminal activities, right? And as per the Basel committee, right, they have forced, or they have just oh, they have forced a lot on this KYC part, that the banks should perform KYC as a part of their regular routine to ensure that it should cover all types of risk. Now, whenever we talk about KYC, it is not that once you open your account and you're done with it, right? The basis, the different set of customers, the KYC is repeated. Let's say for retail customer, KYC is done once in 3 years. For some banks, they do once in 2 years, right? For EDD, KYC is done, let's say, every year, or maybe once in 6 months as well. Depends on the type of business a customer is dealing with. How volatile that business is, how risky that business is, right? So that's where we have to do the KYC on timely basis. That's where we ensure that as a part of risk management activity, that we ensure that the customer that we are dealing with are right and their source of income is also correct. So just one example, let's say today we opened account. I opened account for one customer under saving account category. But second time when I did the KYC after 2 years, right, I got to know the number of transactions these guys are doing, right? And as per the suspicious activity report, we noted that the number of transactions are greater than the limit of your saving account transaction. So in that case, we suggest them to open your current account, right? In order to ensure that the dignity of the account is maintained and they do not fall under suspicious activity report on a regular basis. And that's how, again, initial we suggest our customers, and later on, if the customer is not ready to listen to us, then we just set up a meeting with them, and then we force them to open their account, or let's say uh, just offer them multiple policies to cover the risk. And in case we do not perform this accurate KYC, this is a big risk to the bank. Any other question from the group before I proceed?
So you talked about a committee. What was the name of that? Like, I missed that that
That's
name.
Basel Committee.
Could you please spell that?
BASEL.
Okay.
So it's
Thank you so
not
much, sir.
Basel, it's Basel Committee.
Okay, sir.
So after this 9/11, right? So this Basel Committee was introduced. So it was there for a long time, but it was forced in order to avoid all the criminal activities. How do we need to stop the terrorism financing in our part, which we will talk about in few minutes time. So whenever we talk about this, the KYC, right? There are a few elements that a bank should have for their customers. Bank should have a robust KYC program, right? Just to ensure that customers are aware of the bank policies, right? Bank is aware of the customers the bank is dealing with, ongoing monitoring for high risk accounts. Again, this is a part of their risk management activity, and they have proper risk management team if there is any risk identified. So how do they need to deal with that risk? So every bank should have their risk management team. Now I'll start giving you some live examples. So we work for some of the largest US banks, right? And what happens, they have their robust risk management team. On a regular basis they keep on updating us. Okay, what if they get to hear any new thing in the market wherein the customer has tried to just take advantage of the bank policies. Our risk management team ensures that they it doesn't happen with their bank, right? So they keep on updating the teams. Number one, they keep on updating the policies. Whenever we talk about KYC, every day or let's say every week, the policies of KYC norms or the requirements, they keep on changing. Why is it so? Based on the risk identified by in the market and any other sort of risk they see in the market, banks they keep on updating the terms for KYC. So we were working for one of the one of the US largest bank, Wells Fargo. So we were doing this activity, KYC work for them. So that's where, because another the reason for banks to perform KYC is this is one of the mandatory requirements. It is as per SEC, all the banks they need to perform this KYC activity. So normally when we open the account, we do the KYC activity. But after opening the account, bank stopped following the KYC. And as per the guidelines, they need to perform this KYC once in every 2 years, 3 years, or let's say based on the risk of the customers. So they need to perform it on a regular basis. So bank stopped doing this KYC activity. They said, no, we do not have bandwidth. So they received 3 notice from the Security Exchange Commission, SEC. And the last notice was, if you will not perform the KYC for all your customers, your banking license will be cancelled. This is the worst case that can happen, right? And Wells had to pay almost very 1 billion, uh, not 1 billion, I guess 50 million or 70 million penalty in US dollars for not complying with the KYC requirements. And when they got the final notice that the banking license will be cancelled, so that's where they performed the KYC for their 280 million customers. And that's how we got the business, wherein we were doing all most of the part was CDD, that which we were doing, but the EDD part was with some other vendor. But yes, they were also performing the enhanced due diligence for the customers, like political exposed people, for other current account holders, any other businesses, HNIs and others. So that's again a part of the risk management team. A company ensures that all the risk management team is taking care of these basics. Can anybody help me? What are the components of KYC process? I think if you can help me out.
Is it means the documents?
What are the different components of KYC? Not documents, but whenever you talk about the KYC process, what are the different components? It's KYC process.
Sir, I think it is identifying the customer,
Okay.
monitoring the transaction of the customer, and mm,
Good. Anybody
yeah,
else? Jyoti, can you add? And Shivam, I see you are silent in the group. Jyoti and Shivam, can you hear us?
Source of income.
I'm sorry, Jyoti, I didn't hear you. Please come again.
Source of income.
Source of income. No, that's the part of your CDD. So I'm saying the components of KYC process.
There are many like customer identification or maybe acceptance, and
One is customer
transaction
acceptance.
monitoring,
Okay.
transaction monitoring, and maybe just to eliminate some kind of risk.
That's risk management.
Yes.
Okay, so all of you just covered a bit of it, right? Customer acceptance. So before any customer is opening any account with a bank or any financial institute, they have to ensure the customer is aware of the policies and customer agrees to provide all the documents before opening the account. So one, customer acceptance. Now this is from the customer side. Now second, now bank should also be ready to open the account with for one customer, right? So bank should also have the standards, right? So they need to ensure whether customer is ready to accept their policies and they also want to just they're also agree to accept that customer. That depends on there are different sets of customer. Let's say for one customer in the past that a fraud happened, right? A bank may not want to open an account for that person. So again, so acceptance should happen from both the sides, from customer as well as from the bank side, right? Second, customer identification. So once the customer agrees to provide all the documents and bank also agrees to open an account for one customer. So that's how the second step starts with, that is called your uh, customer identification program. So this is a part of your KYC, but actually this happens before the KYC process. When we say customer identification program, as per CIP, for all the customers, team checks whether the documents which they have provided, are these documents valid? Some basic information they check, right? And after the CIP is completed, uh, then again their KYC proceeds, right? KYC team proceeds. Okay. So once their CIP team does perform the activity, then the KYC, then what they do is, so I'll tell you what happens. So once after this customer acceptance, customer scans the document or customer sends the documents to the bank or submit the documents in the bank. What bank team does is they scan all the documents and they send it to the backend team, which is like CSR or CIP. The scanning part is done by the DSR team, document storage team. So I'm actually telling you the processes which are involved here, right? So there is one document storage team, DSR, right? They scan all the documents and they send it to the back office. From the back office, our CIP team, Customer Identification Program team, what they do is they validate the document. They go to the different sites, they validate the documents, and then they open a dummy account for that particular customer. Once CIP is completed, right, a dummy account is opened, right, and post that it is sent to the KYC team. Now KYC follow the EDD and CDD norms, right? And after performing the KYC, then the bank is open, bank account is open. Is that clear?
Sir, can you please explain it again? Actually, it's a
Sure.
very lengthy process.
So as a part of the process, so let's say there's a customer A wants to open an account with bank A, right? Customer A will provide all the documents to the bank, right? Just a minute. Sorry, guys. Okay. So normally, so customer first, what customer does it? Customer, let's say, wants to open an account with any bank. Customer will go to the bank, fill up a form, and as per the form's requirement, customer will submit all the documents to the bank, right? So what bank they do is they say, yeah, from as a part of the front office, they will help the bank to open accounts, right? But all the backend job is done by the back office team, right? So what will they will do is they will scan the documents and they will send it to the back office team. In the back office team, there is a DSR team, document storage team, reporting team. DSR team, what they will do is DRC team, right, DSR team, they will collect all the documents for one customer and they will put it in one bucket and they will further send it to CIP team. CIP team will review the all the documents at a high level, right? They will open their dummy account. Once all the documents are good, CIP team will open a dummy account and will send it to KYC. After your CIP activity, KYC team will start performing their activity. Like they will do their due diligence, right? If it they based on the customer, they will decide whether they need to perform CDD or whether they need to perform EDD. Once their CDD and EDD is done and define everything is good, then the bank account is open for any customer. Customer can be any customer. If they are meeting the KYC requirements, then we are good to open their account. And after opening their account, time to time activities will be performed.
So, sir, as the process is very lengthy, so it will take how much time? Like more than 2-3 days?
So far, any question?
Hello, sir. As the process is very long, so is it take more than 2-3 days? Because nowadays bank account is open within 1 day. So is it all the process completed in only 1 day only?
Yes, no.
Hello. Hello. I'm audible, sir. Hello. Hello.
Yes, yes, no, maybe any question from the group?
Hello.
Okay, I'll take it as no.
Hello. Hello.
Now I'll just quickly share my screen and
Sir,
guys, I just a minute. I'm sorry, I can hear you now, guys. Sorry, my headphone just got disconnected.
okay,
Are you
sir.
guys saying something?
Sir, yes, sir. Ajay and Akash had questions.
Yeah, please, Akash, Ajay, go ahead.
Sir, we have the same question that in the recent time the bank do the KYC in a single day. So is it
Come again?
possible? Hello.
Yeah, please come again.
So, sir, in the recent time, the bank do the KYC part in just a single day, and the account is open in a one day. So
Right.
the whole the part are done in a single day, or some part is done after the account is open.
Okay. So, since in this digitized world, uh, we have the facility to open an account in one day, right? But you will see that you can start your transactions after 48 to 72 hours. Though your account will be open on the same day, right? However, the bank would still need some time to perform the due diligence part, right? So they have their central database. They want to check all the information. The central database will help us to validate all the information, right? Post that, there are still a few due diligence wherein once your account is opened, the team is still working on the back end, right? And for the till the further notice, you are not allowed to perform any transaction with your account. So if everything is fine, let's say it's a saving bank account, right? Everything is fine. CDD is done in a day or two, right? So you will be allowed to use your account with immediate effects. But if there is anything, any further due diligence is yet to be performed by the bank, that's where they open your account, they activate your account, and then they advise you not to use your account, or your account will be activated after, let's say, 48 hours or 72 hours. That's how it is done. For saving account, normally it is open in one day. For business account, it still takes some time because they need to perform all the due diligence for the as per the banking norms.
Okay, sir. Thank you.
Thanks for asking this question. So I'll just quickly share my screen here. If you will see as the steps involved in KYC, right? So from the customer perspective, the customer will reach out to the front office. They will provide all the basic documents, right? As a part of their KYC, they will fill the form, they will perform the KYC. And it
Sir,
will
your
go to
screen is
this,
not visible.
right?
Your screen is not visible, sir.
Let me share that again. Let me know if you can see my screen.
Yes, sir.
Yes, sir.
Uh, oh, maybe that may be because of the access. Okay, so now when we say a customer is submitting all the documents along with the filled form to the front office team, the KYC compliance team will check the basic information. HR form se fill kiya hua hai. They have provided all the basic documents such as driving license, address proof. They will check the basic check, right? And after checking the basic checks, they will send it to the CIP, scan it, and they will send it to the CIP, Customer Identification Program Day. CIP team will do the basic CDD, right? They will check online whether the details provided by the customers are valid or not. And then it will be, normally it is routed to the KYC team and they perform the complete CDD. In the CDD is your risk assessment is done and the customer risk rating is also checked. Whether when we say customer risk rating is like your CIBIL score, right? And post that, if everything is goes well, then the account is open. If they see any risk here, then the further EDD is performed. Normally, this EDD is performed for high risk customers, right? But yes, for a normal customer, if they find any risk, then the EDD is performed for that customer as well. Okay. Now we will see that the maintenance of relationship, what they do is a structured and comprehensive CDD process helps predict expected behavior and flag unexpected behavior. So normally what a compliance team they do, right? Every day a suspicious activity report is just extracted from the system, right? So let's say system से एक report extract करी, उसमें कुछ basic conditional formatting लगाई, that says for all the retail customers, if they have any transaction above this amount, let's say above $50,000, it will be tracked under your SAR report. SAR stands for suspicious activity report, right? If anything goes above the threshold limit, that account falls under your suspicious activity report, and that's how your compliance team they do a detailed check. What is the source of this transaction? So that's one part. Second, you will see update CDD. Uh, for different type of customer, as I told you earlier, for different types of customers, CDD and EDD is performed on a regular basis. Let's say if it is a retail customer, once in 2 years or 3 years. If it is any HNI or any business, every year they have to do their KYC. Yes, just allow me a minute, please. Hey guys, can you hear me?
Yes, sir.
Yeah, I don't know. There is some issue with my network. I'm just trying to just log off and log in again because it is getting disconnected again. Just a minute. Thanks, guys. I'm sorry for this disconnection and again. Okay, so we were discussing this SAR and CDD as in when we need time, we update it, right?
Yes, sir.
So now you will see at the last it is mentioned, are any checks required when offboarding a customer? Onboarding and offboarding, there are two terms which are used in banking terms, right? One is your onboarding. When you are onboarding a customer, you are opening their account, you are welcoming them to the bank. That is your onboarding a customer. When offboarding a customer, when customer is wants to just close a bank account, right? So when they are doing any offboarding activity, do we need to do any check? Yes, definitely we need to perform any check. Certain checks. Number one, currently, have they taken any loan from bank? One. Number two, the last activities which they have they done these activities with the right account? Let's say before opening and closing my account, I transfer, let's say, 10 million to one of my friend, right? Now I will have to check whether the transfer I have done, is it done to the right person? Is it not a fictitious person, or the other person has the legal or the legal entity or the bank account and all the details are absolutely fine, so that this does not lead to any financial risk or any terrorism financing. So yes, whenever we talk about the checks while offboarding a customer, we must check all this part, and the risk management team takes care of this part as well. Is that clear?
Yes, sir.
Yes, sir.
Sir,
Yes, sir.
but I have a question related to the previous slide, which was the procedure. Uh,
Yes,
so
no, maybe.
you
Is that
said that.
clear? Hi team, am I audible to you? Hello.
Yes, sir. You're audible, sir.
Hello,
Yes, sir.
guys, can you hear me?
Yes, sir.
Yes, sir, we
Akash.
can hear you.
Yes, sir.
Yeah, just a minute, just a minute. Yeah, say that again, please. Yeah, Akash, you were saying something?
No, sir.
Oh, okay, okay.
Sir, I had a doubt related to the procedure. So, as you said that the DSR team comes into the picture once the case is sent to the back office. So, if you would talk about the previous slide, I can't really see the DSR
So,
team.
so that's the
So,
real-time example that I was giving you. So every
okay,
bank, they have their team. So front office team is the revenue. So normally what we call a front office, that is the revenue generation part. Right. So front office is always dealing with customers, generating revenue for the bank or for the business, right? And once they do it, then they transfer all the work to back office. I just, let's say, did some marketing and I helped to open 100 accounts. Now all the customers provided their documents. So my job as a part of front office is to raise the revenue. After that, verification of the other part is done at a back office, right? Now, how will a back office work until and unless they will not receive the documents? So my scanning team will scan the document, which is called an indexing part. Once your indexing is done, then the DSR activity comes into the picture, document storage retrieval, right? And they, for one particular customer, they bring all the documents in one folder and then they further send it to the CIP team. CIP team, they perform the basic due diligence, right? And once they do the basic due diligence, they create a dummy account and they further send it to KYC team. Once your KYC is done, let's say if they will check whether it is a CDD or EDD. Once their KYC is done, then the account is opened and activated. I was giving you a real life example.
okay, sir. So, as if we would talk about this, the slide which you're showing right now. So, where KYC came before the CIP team and everything. So, do uh, do we just have to prepare according to
It is
this?
KYC
Uh,
compliance team. It is not KYC,
yes,
it is compliance team.
KYC compliance team. So that came into the picture before CIP team.
Right.
So, so my question is, do we have to prepare according to this or the real time example which you gave,
Right.
where
So this is a fair idea. This is a fair idea. So this is KYC compliance team. So KYC or a compliance team, they ensure front office is scanning all the documents and sending it to the back office team.
okay, sir.
This is, they are ensuring that back office team is getting all the documents so that they could perform the required action.
Okay, sir.
Okay. So it is like your DSR or indexing. सबसे पहले scanning हुआ, post that document DSR team. So every bank will call it a different term. But normally it is sort of your document storage team, right? After indexing, one document will be created wherein for that one particular customer, all the required documents will be added there. Then it will be sent to CIP, Customer Identification Program team, right? After the CIP is done, then it will be sent to the KYC team. Once the KYC team is done, the final the account will be activated and the front office team will be informed.
Okay, sir.
Okay. So after this 9/11 piece, right? So in US, they still take time to uh, open their account. Okay. So customer acceptance policy. CAP. Simple. What are the basic things a customer needs to provide as a part of the customer acceptance policy? That means they are agreeing to provide the basic information like their background, origin, a high profile position, linked account, business. So these are some basic information which are covered under customer acceptance policy. Is that clear? Yes, no?
Yes, sir.
So normally, the reason why this customer acceptance policy becomes an important play an important role. There are few customers. They are very much hesitant to share their source of income. Uh, that can be from illegal sources, and anything which is caught under your illegal sources, right? Banks may not open their account. So customers hesitant if they are hesitant to provide documents, bank will simply go ahead and deny the application to open an account. So initial stage पर ही हम लोगों ने उन्हें रोक दिया. Okay. Now CIP, right? So this is mandatory. This is not a voluntary thing. CIP is mandatory for banks. So what in some of the banks, what they do is they perform this CIP. They perform this CIP. Just a minute. Yes. Hello. I'm sorry. Okay, so most of the banks they have their CIP, and when specifically if I talk about the US banks, so they have a different CIP team, and they also have different KYC team. But in India, normally the CIP and the KYC part is done by one team. But sometimes they may have different teams, but yes. But normally, as per the US banks, if I just take that an example, they have different business or different processes. Once CIP is done, then the KYC will be initiated. Okay. Now you will see uh, what are the processes of the CIP which is normally checked. They normally gather information and notify customer. They gather the information, verify the information online, right? Conduct the sanction screening. Sanction screening can normally when we talk about, you will see a word here, OFAC, right? Office of Foreign Act Compliance, something like that. I'm missing the full form of this OFAC. So, so whosoever the customer wants to open their account, right? A business, a bank checks their detail in the OFAC screen, Office of Foreign Tax and Compliance, something like that. So in the OFAC, it is a database. It is a database wherein the list of all the defaulters are added. So if you will find any information of a default customer, uh, you will directly reject the application and inform client for the same. The reason we do it is just to ensure we have everything is in place and we are dealing with the right customers and we are ensuring all the norms are followed as per the CIP and KYC protocol, right? And that's how what we do is we are saying all the documentation we have, these are formally documented, then we are taking care of all the risk-based approach, right? So that means we are covering the risk part as well. And once we are stopping this, so again, as a part of this AML program, this also plays a big role. We will talk about the AML very soon. Any doubt so far?
So I have a question, sir.
Please.
In the OPEC office of forex that you tell, so it is the list of customers who already done a fraud. So
I'll tell you. So this OFAC, so it is a database. So normally multiple banks come together on common platform, right? So whosoever done any or in the list, high risk uh, profile customer, right? What they do is they simply create a list for these customers, right? And they share it across. So in US, so whenever we are opening any bank account, it becomes mandatory for us to check the details in the OFAC screen, right? And in the OFAC screen, if we find it, then we are not supposed to open their account. We simply inform the head office that we found a customer in the OFAC screen, right? So you please take the necessary actions for this customer. Is that clear?
yes,
Any other question from the group? Yes, no. Okay.
No, sir.
Once your CIP is done, then the customer due diligence or the enhanced customer due diligence happens. Once your CIP part is done, then your KYC that initiates. Now you will see after CIP, conduct AML risk assessment, determine whether we need to perform CDD or EDD, right? And some of the basic checks which they have to check as per the guidelines. Most of the guidelines will remain same, but as per different countries, guidelines might be different for while checking their CDD. Okay. Okay. So whenever I hope so, if the people who are attending this class, all of you would have your bank account.
Yes, sir.
Yes, sir. I heard yes, yes from what about rest of the team? Do you guys have your bank account?
Yes, sir.
Okay. So when you open your bank account, so there's a field for the beneficiary. You want to add a beneficiary. Now it is mandatory to add a beneficiary to the account. Have you added your beneficiary there?
yes, sir.
Okay. Now, what is the purpose of adding a beneficiary?
So the main purpose is if you are not there and if you are not if you have an account and you have a balance in that account and insert and you are not in the मतलब अगर आप इस दुनिया में नहीं रहते हैं तो उस केस में आपका जो भी बैलेंस वगैरह होता है वो इसलिए आपके बेनिफिशियल होने को मिल जाता है.
That's one part. Good. Second, in the US or in India as well, right? to our beneficial owner, we also give them or provide them certain access or certain rights that they can withdraw money on behalf of me. If they are signing a check, let's say below 1 lakh, so their signature will be accepted by the bank. So the beneficial owner, they also get some benefit, right? So that's why this also becomes another important part for banks to ensure that they also perform the KYC for the beneficial owner, right? And we need to ensure the beneficial, again on the same lines, we need to ensure the beneficial owner is a legal person or a legal entity. They are not involved in any other activity and like that. So again, side by side, the CDD is also done for the beneficial owner as well. Now, whenever we hear the word PEP, political exposed people or the political exposed persons, this is another set of high risk customers. So for a bank, who are the high risk customers? One become your HNI, your business, medium and above. Third becomes your political exposed people. So whenever you have any political exposed people, they want to become a member of your bank, bank has to perform the enhanced due diligence for those customers. The reason is bank needs to ensure whether the income they are getting, the source of that income should be valid. Otherwise बैंक सिंपल क्या कह रहा है, मेरे पास कस्टमर आ रहा है, कस्टमर अपने जहाँ मर्जी से पैसा लेकर आए, at the end of the day मेरे बैंक में पैसा आ रहा है, so I am safe. But the guidelines says, SEBI and the SEC guidelines say, if you are dealing with any political exposed person, because the source of income for the political exposed people are different, not always defined. The risk is high, right? So that's where bank, they have to ensure that they perform EDD for the political exposed people. Clear? Now, when we use the word PEP, so EDD, so we perform, let's say, who all normally they fall under your EDD. You will see, can you all see my screen?
Yes, sir.
Okay.
Yes,
So you
sir.
will see here the members of parliament, head of state, ministers, high-ranking officers. These are the people, they fall under EDD. Parents and children, siblings of any of these, right? Spouse, partner, in-laws, or uncles and aunts. So if any one of they fall under this category, by default, enhanced due diligence will be done for these customers. Though these are highly reputed customers, but they also just carry high risk. Okay.
Yes, sir.
Let's spend some more time here. So you will see the focus area for political exposed persons are PEP attempting to shield his or her identity, right? The reason why EDD is mandatory. Normally, they do not provide all the information. Take political leader key bank, they will have all the information. So normally, the people hesitate to provide all the details. Then the behavior, what sort of behavior they're carrying, right? What position they're getting, what is the industry they're involved, what is the risk in that industry, what are the business relationship the political exposed person has, what are the products and services a political person is dealing with bank. Is it only an account, or is it something, some sort of investment they're doing as well, right? And that again, country specific, some of the guidelines may differ. Now, if you will see here, designated non-financial business and professionals, any business or profession that poses money laundering risk but cannot be clarified as a financial institution, right? That will fall under your designated non-financial business and professionals, professions, sorry, right? So for such customers, right, uh, the rules and regulations and the guidelines will be different for these types of entities. The reason we need to perform and we need to pay attention specifically to these sort of customers, because at the end of the day, they are not financial institutions, but they are still carrying a risk of fraud and some sort of money laundering. That is how this becomes more important for a regulator to ensure all these banks are highly regulated and they are following all the KYC laws. Now I'll ask uh, to the group. So what is the risk if we miss the CDD and EDD, or let's say if we do not perform the CDD and EDD properly? What is the risk?
Sir, the risk is of
illegal source of fund will flow into banking system.
Okay.
Illegal source of fund can be flow into banking system.
One. Okay.
and so these illegal funds can be used for the terrorism and all these criminal activities.
Okay. Okay. Anyone else? So in short, if bank is not performing their CDD and EDD and if something is caught in their audit, the statutory audit, right? One, they will have to pay a very heavy penalty. Second, worst case can happen, the banking license may go cancelled, right? So now if I just share my screen again, now EDD is performed for like trust, nominee fiduciary accounts, certain corporate accounts, introduce business accounts opened by intermediaries, will expose people, we read about it. Non face-to-face customer, if any customer is sharing all the information but online, and any correspondent banking, that's where our EDD is performed. Because we see the more risk, and that's where the more the risk is, and that's where my criteria for due diligence will become from normal to enhanced due diligence. say inadequate due diligence can stake a bank to operational risk. When we say operational risk, I am providing the wrong information. Concentration risk. When we talk about concentration risk, it means the risk, reputational risk, money laundering. You can become the main source of the terrorism financing, so you become the highlighted one. Legal risk, yes, another customers, or let's say as per the SEC guidelines, so there's also a lot of legal risk involved to the bank if they do not perform any the due diligence properly. So as per the bank, every customer has given some rating, low, medium, high. Low, medium, high means for the low customers, the number of transactions and the amount they are carrying in their account is low. So this gives a relaxation to bank. The risk is low, not zero. Risk will always be low. For medium customers, yes, they always pay some attention. And for high risk customers, they always pay extra care and attention to those accounts by doing EDD and by the regular monitoring of their accounts. And as per their risk rating, due diligence is performed, whether they need to perform normal CDD or it should be EDD. Any questions from the KYC? Before we
So
just
you
quickly touch
we
upon.
said okay.
Yeah.
So you said double CDD. Like what it is?
Double CDD. It's EDD.
Okay, okay. And you used a term like non-face and non-face to face
customer. When we say
customers.
non-face-to-face customer, so let's say you are the one, you are not directly, normally for all the customers who open their account, they provide their physical presence, right? Or some of the beneficiary or some of their team member, or let's say anyone on behalf of them is providing their, is ensuring their presence, right? So in that case, a customer first, we normally ask the customer, why don't you come in person and meet, since we are going to have you as our member, right? So let's meet in person. But if the customer is not meeting, then again, this becomes a risk. That what is it that the customer is not meeting us?
Also, sir, what is the full form of SEC? That SEC guideline
Security
which
Exchange
means.
Commission. Security Exchange Commission.
Okay, thank you, sir.
Any other question before we start touch the AML part?
No, sir.
No. Okay, now I'll ask few questions from the group. What is customer acceptance policy? Anybody from the group, please answer.
Sir, what do you say? Customer acceptance program.
Policy. What is customer acceptance policy? CAP.
Okay. So, sir, it is when first time we meet the customer, then customer has to accept the policies of the bank and submit the document which is required to open the account. So, this
Okay.
is customer identification policy.
Not identification, customer acceptance policy.
Sorry, acceptance policy.
Okay. Anyone else? Anybody else? Okay. So you're right here. Uh, how do we ensure whether any suspicious activity has been done in an account or not? How do you ensure that?
With the regular checks.
Okay.
So, regular monitoring of the transaction.
Regular monitoring of the transaction. Good. So what does it? How do you get to know whether it is a suspicious transaction or not?
So, sir, there is some standard according to the customer that the customer is use is maintaining an average balance or that kind of thing which used as a certain barrier. So if the customer transact more than that, then it is like a suspicious activity, and for that the team is made for team is uh, made like a KYC team which monitor these activities.
Okay. Anyone else?
Okay, whenever the transaction touches the threshold limit, they get to know that there is something suspicious, and we have to check the background, what is the source of income and everything, and yes, through which they get to know what is the reason uh, and everything that whether the transaction is is not related to the money laundering part or something like that. So through which they get to know. Through this, they get to know this.
Okay.
To verify from the customer if the transaction, they actually did the transaction or not.
Okay. Nice. Okay. Now, when we read about screening, what do you understand by screening? Nobody asked this question, but now I'm asking.
Sir, screening is basically scanning the document part uh, and then checking with the database that the information is correct or not.
No. No. Anybody else?
Screening is checking the transactions done by the customer, whether
No.
there is any
No.
suspicious thing.
No.
Okay, so maybe screening is something that is related whether the country is sanctioned or not. We used to screen that, or we used to check whether the customer belongs to that specific country where the
Absolutely. OFAC screening, the one I was talking.
OFAX, yes.
Good. Okay. So guys, just listen to the question very carefully and then answer, right? So let's not get confused here. So who can be regarded as the customer for the purpose of KYC?
So could you please repeat the question?
Sure. So who can be regarded as a customer, or who can be called out as a customer for the purpose of KYC?
Who wants to open an account, basically?
Like,
Sir, who want to open an account and have the required document to open that account, and they accept the policies of the bank as well.
great. Example?
Example, so suppose the X person is coming to open the account, and the front office person guided him that these are the documents we are required, and this is the process. So
An
if they
individual
find,
ones.
yeah,
Second,
individual one.
second.
It may be, sir, HNI as well.
Okay.
So basically, whenever the money is involved in the in maybe the transactions are involved or the money is involved, we have to do we have to do the KYC. Well, regardless the person, he if he is HNI, then we definitely have to just go through with the KYC and EDD. And if the person is the retail customers, like normal customer, common person, so we have to do the KYC too for that person. It's not really involved like if he wants to just open an account, if money is involved, for example, the example which you gave, the Paytm. So their money is involved, so we have to do the KYC in that particular thing too.
Okay, good. Good. So one is your suspicious activity report. The other one is your CTR, cash transaction report, right? Your cash transaction report is like your also just referred as your currency transaction report. So all like different people, they call it different types. So some people call it CTR means cash, some people call it currency, right? SAR again a type of, these are all reports wherein which bank is using to identify if there are any suspicious activities which is going with any customer or not. Okay, now we'll quickly just spend another 15-20 minutes and we'll cover the AML part. Now, can you please help me? What do you understand by the term money laundering? And just one request, I want rest of the group also to participate. I know, I guess who late joined us late. Okay, so we have Sana Kochar and Shreya Arora. Sana
Good
and
morning,
Shreya,
sir.
hi, good morning. What was the time for the session?
So it was 10 a.m. Actually, I had a doctor's appointment and I had to text Sakshi ma'am with the same, but I couldn't. Hence, I joined late.
Okay,
Yeah.
thank you. Just hope everything is fine.
Yeah, it is.
Shreya,
Thank you, sir.
Shreya, you're on mute. Shreya, can you hear me? No one. Okay, now I'll just throw this question to the group. What do you understand by the money laundering?
So, money laundering is a process in which money is the taxes are not paid on the money and they're tried to be converted to white without payment of taxes.
From black money to white.
Okay. Anyone else? Given the definition of money laundering.
where the black money enters into the financial system.
Okay. अगर आपको इंटरव्यू में पूछेंगे तो what answer will you give? Anyone?
So in a money laundering, we just convert the black money into white money, and the ownership of the money is not known. Who is the actual owner of the money?
Anyone else?
Yes, sir. Money laundering is a process that criminal usually attempt to hide the illegal source of their income.
Sorry. Come again, please. Yeah, sorry, Shivam, come again. I missed you.
Money laundering is a process that criminals use in attempt to hide the illegal source of income.
Okay.
Yes, sir.
Anyone else? Jyoti, Manish, Rahul, if you can add.
Sir, converting black money into what?
Converting black. So if I'll ask this question to you in an interview, you'll simply say converting black money into white is money laundering. I know. So you all of you understood the concept, the basic of money laundering. But I just want to hear it from you. What language will you use? Let's say
So when
if you will have to
so,
answer this question in interview.
so basically, when illegal asset or fund converted into the legitimate fund, or one person hides the source of the fund where it exists.
Okay. So in short, so right, all of you are right. So the definition that you give is right. But whenever someone is asking questions in interview, right? So just in short, be a little bit elaborate. To giving answer to the point is okay, but whenever it is a domain interview, just in short, try to build a little more in detail, right? So we can call it out that the money laundering is a process. Uh, is the process of converting you're making large amounts in small chunks, wherein the actual source of the origination is high, or it's not easy to track. Somewhere we can also say money laundering is a process that is used like a criminal use in attempt to hide illegal source of their income, right? A lot of things we can also add it here, like in our money laundering, it is a process wherein a degree of knowledge or suspicion is hidden. You know, that's how multiple definitions are given, but just one liner might not help everyone. Depends on the whether I want to hear some more in detail, right? So according to just ensure that you prepare yourself. Did I make myself clear? Yes, no.
Yes, sir.
Yes, sir.
Because guys, from an interview point of view, this will really help you. At the end of the day, we need to know that we understand the domain, plus we should also be able to sell ourselves at the time of interview. Okay. Normally, um, when we say the money laundering, right? If we just go by the slides, it says the necessary act of laundering itself. For example, the provision of financial services. So the provision of financial services is the word you will hear it very often whenever you talk about money laundering. Can anyone help me? What does that mean? Provision of financial services. Guys, to the group. Hello. Guys, can you hear me?
Yes,
Yeah.
sir.
Yes, sir.
What when we say provision of financial services in money laundering, what does that mean? When we say provision of financial services, is something the arrangement that include the variety of business relationship, banking, fiduciary, investment agreement, and all. The way we are raising funds, the way we are arranging funds, that's where we use the word. We use the word here, provision of financial services. How are we using financial services to get money at one place? When we say provision, we are using the word provision here, right? And second, when we say there are two main elements of the money laundering, one is the provision, and the second one is degree of knowledge or suspicion. Wherein, from one side, we are saying how are we using the financial services to get the money from the legal sources. Second, we are also saying when we talk about the money laundering, the degree of knowledge is degree of knowledge of suspicion. So we are not sure or we are not aware, we as a bank is not aware of where the money is coming from. That's where these are two things in when we talk about your money laundering, right? One is your provision of financial services, other one is degree of knowledge or suspicion.
Sir, can you give the example?
Yeah, okay. The one for provision of financial services. So I am the one who is arranging money for you, and I'm using various types of financial services, like I'm using fiduciary services, I'm using a banking services, I'm using investment management services, and by the end of using the banking platform, I'm arranging money. This is called provision of financial services. I'm using financial services to get the money, right? And the second, when I say in the money laundering, is degree of knowledge, right? So bank should be aware, and whenever required, a customer should be able to provide the details where the money is coming from. If they are able to provide and bank is able to validate whether the details, money which is received from other account or other person, they are the valid person and they have the legal source, then bank is fine. If it is not clear, then it is called the degree of knowledge or suspicion is unknown. The bank is not aware. So that's where this falls under your money laundering, right?
Okay, sir.
Okay. Can anyone tell me what is the difference between money laundering and terrorism financing?
So
The difference between money laundering and terrorism financing.
yes, terrorism financing. So the main purpose of terrorism financing is for illicit sources like terrorism, and the main purpose of money laundering is just to make the black money white.
Okay, good.
It's not
Anyone else?
important. Yes, it's not important that in money laundering the purpose has to be illicit.
And sir, the
Anyone
purpose
else?
of money laundering is to be evasion of tax as well to hide the actual income.
Uh-huh.
and there may be many purposes, not the only one purpose, that is terrorism financing.
Okay.
So also, money laundering comes from legal sources, but terrorism financing comes from illegal and legal sources.
Okay. So you said the first statement, money laundering comes from legal sources,
Yes, sir.
legal or illegal.
So, money laundering comes like the black money which comes from legal sources, and then it is made white. But in terrorism financing, it's both illegal and legal both.
The second statement I agree, but first statement is something whenever we talk about money laundering, we always say money laundering that we are saying the origination of source of funds is always unknown. When it is always unknown, we always call it the illegal origin of the money.
Okay, sir.
Right. So later on, this is the process of converting your black or illegal source into white or the legal sources. That is the process of money laundering, right? But normally, whenever we talk about the money laundering, this is something we call that the source of origination is always unknown, and that is how we call it the illicit or illegal. Okay, good. Okay, now we understood the money laundering. Now, can anyone help me? What is anti-money laundering?
Taking the steps to
Just a minute. I see Deepak Chauhan joined. Hi, Deepak. Deepak, can you hear me?
Hello.
Hi, Deepak. Deepak, what was the time for the class?
सॉरी सर एक्चुअली मैं जस्ट इवेंट में आया हुआ था तो इसलिए मैं लेट हो गया.
Okay, okay. I hope you informed Sakshi. Sorry, I can't hear you.
हेलो.
Yeah, did you inform Sakshi that you are joining late?
हाँ सर अभी मैंने ये बताया मैं डायरेक्ट अभी मीटिंग ज्वाइन की.
Okay, okay. Okay, no, you can go on mute. Okay, now to the group. Now, can you please help me? What is the money laundering? I understood. Thanks for adding your valid points. Now, what is anti-money laundering here?
So, anti-money laundering is basically prevention of crime, like by reduction of the incentives.
Come again?
Like basically stating money laundering as a criminal offense, and anti-money laundering contributes to the prevention of this crime, and also protects the integrity of the financial system.
Okay.
anti-money laundering is basically taking steps and measures to stop money laundering by means taking various activities and steps in by which we can stop the flow of illegal source of money into the financial system.
Okay, so this is the definition of anti-money. So what are the main objectives? What is the objective of AML?
So to hide the source of income, to use this money for criminal activities, and
No. I'm saying what is the objective of AML, anti-money laundering objectives? So one, somebody said contribute to the prevention of crime by reduction of the incentives, like the way they get their money. One. Second, what is the objective of anti-money laundering?
So, protection of the integrity of financial system.
Protection of the integrity. Okay, okay, got it. So when we say protection of the integrity of financial system, can you please elaborate a bit?
So in a way that so basically money laundering is making the black money white. So I think this is against the financial system, and the black money doesn't really come in the circular flow of the financial system. So that's why it is there to protect the integrity, so that there is no um, like c- um, I mean,
Anybody, anyone else can just add their value, add their inputs. When we say protection of integrity of financial system, what does that mean?
Means the stopping of the tax evasion.
Stopping off.
Tax evasion means those who are not means
थोड़ा सा anyone
paying the
else?
taxes.
So normally when we say protecting the integrity of financial system, in short, we are saying that we are stopping the money launderers to use the financial system to convert their black money into white. So that's the main objective when we use the word protecting the integrity of financial system. So that's where the main objective of AML is to protect my financial system and not allowing anybody to take disadvantage of my financial system. Right? How can we do this? By implementing KYC, right? What when we say how do they originate funds? They originate funds from banking. The original source of income is unknown, illegal, right? Now they're converting their illegal money into legal money through the banking and financial services. Now, the first step, if we take that, we cut their roots. Now we cannot allow anyone to open their bank account without providing all the required information and without completing their CDD, customer due diligence. We cannot open their account. So first thing, it can be stopped then and there, right? So that's one part. Second, criminalizing money laundering. How can we do this, stop this? So every time a money is transferred from one account to another account, right? And suspicious activity report, currency transaction report, by keeping a close watch on every account is helping, is another objective of AML, right? Then affecting provisions like the way money launderers are converting their illegal money to legal money to legal sources, right? How can we stop them? Again, there are different provisions a bank is using. Currency transaction report or the suspicious transaction report we already discussed, right? And the enhancing the international cooperation and policy and mutual assistance. When we use the word, this is again as per your slides, whenever we use the word enhancing international cooperation and mutual assistance, so means we are sharing and we are using the best practices other countries are using in order to avoid or to prevent the money laundering. Again, that is the objective of my aim, right? Let me quickly share my screen here. Now, whenever we use the word criminalizing money laundering, it is like drug trafficking related serious crimes and all sort of crimes. How can we do this? Again, we are just stopping their source, right? If we cut the roots is the banking system. If we make our banking system so strong, we cut their roots to enter in the banking system. That's one. Because this money is used in anywhere else in the illegal activities. When we say affecting provisions on or confiscations, normally simply uh, crime should not be. Normally they're saying crime should not be, but how can we stop this? Again, by implementing or with our strong risk management policies. KYC CDD, you all are aware. System reports, you all are aware. Enhancing international cooperation means financial intelligence unit, Egmont group, supervision and monitoring. So these are the groups. So these are the groups which are helping in providing the best practices and the supervision services. Right? Financial intelligence unit, if there is any threat which they foresee, Egmont group providing the best practices, right? And the any other live scenarios and how they have dealt with it. supervision and monitoring, how can we different policies which help in the supervision and the monitoring of the, any bank, KYC and other bank. Any questions so far before we proceed? Guys, yes, no, maybe. To the group,
No, sir.
anyone else? Any question before I proceed?
No, sir.
No, sir.
Okay, okay. I know, guys, all of you would need a break, but just let me spare another 5-10 minutes and then I can give you a break. Okay. So whenever we use the word AML, right? And in India, we also normally the other word is also used as your CFT. CFT stands for your combating financing against terrorism, right? AML, your anti-money laundering, right? And side by side, CFT is your combating financing against terrorism, right? So, what are the consequences if bank is not meeting the criteria of AML and CFT, right? And I will just quickly just share my screen here. What are the consequences? Is something legal and regulatory sanctions penalty if a bank is not following, or if the risk management team of a particular bank is not strong, and during the audit period, if there are any observations noted, then this becomes a problem for the bank. Now, what can happen? A legal and regulatory sanctions penalty. The penalty could affect the bottom line. Obviously, yes, to the customers, small customers, negative publicity, loss of business, loss of goodwill, right? And again, at the end, loss of business. If there's a loss of business, right? So so normally few years back, so there was a rumor that the ICICI Bank has gone bankrupt, right? So anytime the money might just stuck in the bank. So what people started doing is, immediate they heard this rumor, they started withdrawing money from all the ATMs, right? And when this was shared with ICICI leaders, board of directors, and immediately they started providing confirmation, advertisement, and all that your bank is fully safe, and uh, there is no need to worry, right? So again, loss of goodwill is something like loss of business, right? And if we are not complying to AML CFT policies, again, another risk you will see there. Any questions so far before we quickly discuss the stages of AML, money laundering?
No, sir.
Okay. Now, quickly help me, guys. What are the 3 stages of money laundering?
Placement,
First,
layering,
placement,
and
layering, and
integration.
integration.
God bless you. Happy that all of you know this. Okay. When we say placement, what is placement?
When the
Placement
money,
is when illicit funds are placed into the financial system via
when
Placement
the
of
money enters into a system.
placement of bulk cash into the financial system.
Okay. Layering.
Layering is basically the
One is like
transfer
also
of funds
confused.
Layering
So
is
layering is
transferring of
layering is
funds
after.
between the different accounts. You can say that.
So layering is basically moving and manipulating the funds to confuse the sources and and make the things complicated, and basically eliminate the paper trail.
okay. Example.
Suppose, sir, we have a large transaction of 10,000 crores. So, and if this transaction is done in a small amount of 10,000 in a different number of account, then it is called layering.
So I think this comes under placement because at this stage the money is entering into the financial system. And for layering, it can be once the money has entered into the financial system, then just moving the money from one account to another, like transfer of funds by check or monetary instrument, or maybe depositing a refund check or wire transfer or interbank transfer, or maybe international transfers as well.
That's right. That's right. So placing, how are we placing the money in the bank? Let's say like 100 crores, right? How can we place 100 crores in the banking system? If one person will start depositing on a regular intervention, this will be caught under suspicious activity. Now, how are we ensuring that the 100 crores are placed into the banking system? Let's say I divided 100 crores into, let's say, 1 million people, right? And I requested them to start depositing this money in the bank account, right? So that this will not be caught under the suspicious activity report. And slowly and gradually, now once the money is placed, now let's start creating layers. Now you start doing multiple investment, you do the business, you just import, export, you buy, sell. So you create multiple layers so that now this money actually becomes an original money and white source, right? And that's how your layering part gets into the picture. Now the origination of the fund becomes unknown. Now for one transaction, there are, let's say, 100 transactions. Now you cannot get to know, and not 100 transactions between two parties, between multiple parties. I open an FD account or any other small FD or any other deposit, uh, and maybe I lend to somebody or any other activity I use bank, right? Wherein the initial deposit I can use as a part of my cash. So what I'm doing is now converting that black into white. Now I'm creating multiple layers so that tomorrow when bank is trying to find out the origin source of this income, right, that becomes unknown. And this is not one transaction. Let's say there are 1 million customers who are doing such transactions, and they are ensuring the multiple layers are created so that banking system cannot catch them easily. So this is called your layering part. And after your layering, what is the last stage of money laundering?
Integration, sir.
Integration. When we say integration, what does that mean?
Basically, the use of that money, like purchasing of uh, assets, luxury assets, so that the money can be used.
Good. Good.
Using the
I
money,
guess. Uh-huh. Yes, please.
using the fund that were cleaned by the layering process.
Okay. Please come again.
Using the fund that were cleaned by the layering process.
Using the funds which are cleaned by the layering process. Absolutely right. Good. Okay, now I'll start asking a couple of questions just to get some more comfort. Uh, why there's a need to check or to perform anti-money laundering checks? Anybody? why there's a need to perform AML checks. To the group.
Sir, to prevent from the conversion of black money into white money, or we can say that the person who are trying to do so is not able to evade the taxes or not able to fulfill their purpose.
Now, anyone please help me again. What are the main objectives of AML? What are the objectives of AML?
So one of the objectives of
source of income.
Sorry. Okay.
Hide source of income.
Hide source of income. Except what are the objectives of AML?
Protect the integrity of the financial system.
One. Second.
Cut the source of income.
So we're saying contribution to the prevention of origin of organized crime by reduction of the incentive. So cut the source. Okay. I take it.
By seizing the accounts, like so that they won't be able to use that money further.
Under which conditions KYC should be applied? So my question is, under which conditions KYC should be applied?
the KYC is done for the due diligence of anyone who is opening a new account.
One. Second.
And in case of a high net worth individual or somebody who is politically exposed, we also do an advanced due diligence on them.
That's the EDD that we do.
Yes,
Enhanced
sir.
due diligence that we do.
Yeah.
And so this is one. So we are saying, but under which conditions? So you are saying for if there are while at the time of opening account, KYC should be done. And when can we do the KYC again? Or after periodic intervals. This is mandatory for all the banks to do the KYC for all their existing customers. Right? For all their existing customers, this is a guideline all the banks they have to follow, that after a certain period of time they need to perform their KYC for these customers. Okay, what is FATF?
Financial Action Task Force.
What is the role of this Financial Action Task Force? These are the global bodies dedicated to AML. Sorry, go ahead. Sorry, someone was saying something? Shall I proceed? Okay. So I was asking, so this FATF, Financial Action Task Force, it is a global body dedicated to your AML, anti-money laundering, right? So they provide the guidelines and enforce all the central banks to use it and enforce it in their regime. What is BSA? What is BSA, guys? Hello? Hello? Guys, can you hear me?
Yes, sir.
Okay. What is BSA?
The Bank Secrecy Act.
Right. What is the purpose of BSA? Right, you got it right. The full form of BSA is Bank Secrecy Act. But what is the use?
So it's done to detect or prevent money laundering.
Sir, it monitors the foreign transaction basically.
Okay. So this is established for the record keeping and reporting requirement of the individuals and financial institutions. Transaction monitoring, transaction, and reporting. When we use the word record keeping, right, to document everything and to record document and reporting purpose for individual and banking financial institutions. Clear? Just to ensure that you know these words, this will really help you at the time of your interview. So what is US Patriot Act? So US Patriot Act, it was launched in 2001, right? And this was again in response to your terrorist attack of 9/11.
So which act?
Right? The US Patriot Act,
Okay.
right? So again, in response to your 9/11, so all the policies were made more strong, right? And uniting and strengthening America by providing appropriate tools required to intercept and obstruct terrorism. In short, US Patriot Act was any small fishy activity you are noting, make sure you take action. Right? That's the purpose of US Patriot Act. What is Basel? In Basel Committee? So you will say Basel Committee is BCBS is a normal word that we get to here. Basel Committee of Banking Supervision is the global standard which they set for all the banks of the member of the Basel Committee, right? There are almost, I guess, 27 plus central national international banks, wherein it is this Basel committee that provides all the information, best practices, and the guidelines for the supervision, wherein banks should follow in their respective countries to ensure so that they could work against your AML money laundering and just prevent your banking system of your country. So in short, this Basel committee was This is an international committee, in short, if we'll have to cut it out. This was formed to develop standards for banking regulations. Okay. Any questions so far? Yes, no.
No, sir, it's clear.
Thank you. Anyone from the group? Any question?
No, sir.
Oh, I just got the full form of OFAC. It is Office of Foreign Assets Control.
What's
So could you
the
please repeat
class, sir?
that?
Office of Foreign Assets Control, OFAC.
Okay. So,
Yeah.
sir, it is a list of customers who already done some frauds with the other banks.
So right. So not fraud. Anything, any suspicious if they are in the OFAC
Okay.
list, right? But yes, that's where they have to. Banks, they do not open their accounts. Okay, what are the major risks associated with bank? Can you please help us out? What are the different types of risks associated with banks or banking system? Let me just quickly share my screen. Right.
the one is when the one party, when the borrowers are not able to uh, uh, give their
So
EMIs on time and
financial risk. So every category that you will share, so that will fall, every example that you will give, that will fall under certain activity, right? So banking, there are multiple banking risks. One is your strategic risk. Strategic risk means you have opened a bank, right? What strategy do you want to follow in order to ensure you make maximum profit with limited risk? Strategic risk. Second, operational risk. Operational risk, a customer deposited, let's say, 1,000 rupees, and the front end guy entered 10,000 in the system. Operational risk. This operational risk will or may lead to your financial risk as well, right? But apart from that, there is an independent financial risk. The example that we gave, right? Compliance. If you do not have your strong risk management team, and during audit, if something comes up, this will hit your reputation like anything. Then you have your credit risk, the one example that you were giving. Then you have your market risk. There are n number of risks associated with bank wherever money is involved, right? Normally, when we talk about the identifying risk, that's where your risk management that plays a big role here, right? And when we talk about your AML compliance, how do you identify risk and how do you manage your risk? So, so there's a normal in our green belt when in the industry, especially like BPO industries now. So we follow the Six Sigma approach here, right? Six Sigma approach basically helps us in identifying the risk, right? And how are we assessing whether these risks are critical risk or just low risk, and what are the mitigating steps we are taking to cover these risks, right? So again, the same approach is also followed by the banks specifically, right? So normally, first step, they identify the risk. Second, they assess the risk, the criticality of the risk. Third, they implement controls to mitigate these risks. So let's say I'll give you one example here. Customers, how are we ensuring whether the risk is high, medium, or low? First of all, if we are dealing with any new customer, is customer ready to provide all the documents? Yes. Okay. No, the customer risk will go high. Now the assessing risk is high, right? Because the impact may be high. If the customer is ready to provide all the documents, then the risk we are assessing will go low, because customer seems to be genuine and is providing all the documents as per the banking guidelines, right? If customer is providing, then how are we managing the risk? We are managing the risk by doing CIP and KYC, right? This is how we are managing the risk. For the customers, they are not providing all the information. We are saying that how can we manage the risk? We will report out the detail of that customer to our regulator, that we had one customer, right, wanted to open an account, but when we requested, so the customer provided to denied to provide the information. Again, we manage the risk. We did not open the account. Second step we took, we informed the regulator accordingly. So that in other bank, if customer goes, just ensure that we are informing you from our side. Is that understood?
Yes, sir.
Okay. Any other question before we just close this part? And in case you have any question before we just go on break.
Could you please repeat the assessing risk?
Okay, assessing risk is first of all, we do that identification of the risk. First, identification, analyzing the risk, right? And then the managing risk. Identification of risk is something, first of all, we are trying to know, okay, whatever the activity we are doing, is there any risk involved, right? After that, if we found if there is any risk involved, okay, what is the criticality of the risk? Is it high, medium, low? Right? If it is high, medium, we need immediate attention. No risk is a silly risk, right? So whatever risk we find out, we have to ensure how soon we need to implement the mitigation process, right? So we found that there's a customer who wants to open an account. So we saw, okay, now this is one activity. Is there any risk? Yes, there is a risk. What is the risk? Okay, is this customer a genuine customer or an illegal customer, right? How do you know? CAP, customer acceptance policy. You will ask customer that you need to provide all these documents. Customer said, okay, I will provide you all the documents. So when you are assessing risk, you said, okay, customer is providing all the documents. So the risk is low or maybe medium, right? On the other side, checking customer says, no, I'm not going to provide you any of the documents, but still I want you to open my account. So this will become your risk is high, right? What action will you do in order to cover the risk for customer A, the one who is providing all the documents? You will do the CIP KYC. This is how you're managing risk. Whether the customer is providing all the documents, are these documents genuine, right or not, right? So that's how you're managing risk. On the second customer, the customer who is not ready to provide the documents, what you will do, you will not open the account. It is a high risk customer. You will not open the account, right? And side by side, you will also inform the regulator. So this is how you are managing your risk. Other side, you are getting your HNI customer, right? Or any PEP customer, political exposed customer, right? So by default, you will see Baba customer is providing all the documents, but still it is a high risk customer because there are n number of things may be associated to this customer. So they need to be double sure, or they need to take extra care for that customer when they are opening their account and managing the relations. Okay.
Okay, sir.
So identify, assessing, and mitigating risk. Okay. Anyone, any questions on AML KYC before we go on break? And post that, we'll try to cover stock borrowing and lending and the commercial management. Any questions, guys? Okay.
No, sir.
Then I'll thank you. So guys, it's 12. Let's take a 20 minutes break and let's come back.
Okay, sir.
Thanks everyone. Thanks for your time. Make sure you do not drop off. Hi everyone. Hi everyone. Is everyone back?
Yes, sir.
So,
Great, great. Okay. Now, do you guys still have any doubt or any questions on AML KYC? Yes, no, maybe.
no, sir.
Okay, now let's quickly start with our SBL, stock borrowing and lending. So guys, any guesses what do you understand by stock borrowing and lending? SBL.
So it is a temporary transfer of securities by the lender to the borrower, uh, and just with a predetermined agreement that the other person will buy back the security on the predetermined price, or with whatever is in the agreement.
Okay, good.
And sir,
Any
it is
example? Yeah, guys.
sir, it is done to raise the capital for the company.
Okay. Okay. What else?
For example, if the company needs some funds for the working capital requirement or any other purpose, they lend some shares to the bank or any other financial institutions and get funds from that.
Okay. Any example? Any example?
So example must be the live example, or we can say that the example of a company where they lend their shares, or it can be made as well.
Why do they lend? What is the purpose of lending?
Purpose of lending. Okay.
So we are
So
saying it is securities lending and borrowing or lending. Why one needs to lend and why one needs to borrow?
The lender will get the fees, and this is more like additional income, because at the end of the contract he or she will get the security back any which way. So the additional amount is like fees, which the lender will get. And for the borrower, it is like they don't really have to buy the full asset or something. They can borrow it, and uh, they can use it in further ways. Maybe if he is in stocks, so they can they can buy or sell. They can sell basically without even buying. So yes.
Why one needs to borrow?
to fulfill their short-term goals.
Example, what
suppose
sort of
suppose
short-term goals?
there is one company who want the funds for the working capital requirement. They go to the some bank and lend their security, and they find that the interest that they have to pay on these security is quite less than they go for the uh, any other party or issue debentures, and they think that the cost of raising capital is quite less when they take the loan against the security. So they uses this method, and the person who gives the loan takes the interest from the borrowing party. That's how both the parties are earning. The one party is earning the interest, and the other party is saving the cost for raising the capital.
Okay. I'll ask. Okay, good, good, well said. I'll ask the same question again. Why one needs to borrow?
So
So
for
there be
short
multiple
selling,
reasons.
Tell me.
so for short
So, sir,
selling,
the first
Mhm. Yeah, go ahead.
So to fulfill the capital requirements.
When you say capital requirement, थोड़ा सा elaborate करके बताओ.
So say when a company would want to start a new venture, they might want money for their working capital in the sense for their day-to-day purposes, for their management, etc. They can borrow money.
Okay, one. Second.
Just to cover his short positions.
Okay. Just to cover a short position. Okay, okay.
to reduce their borrowings, which they take at a higher rate.
Okay, great. Third.
And the third is to for any other enhancement in the company. Suppose they want to add some product, or uh, they set up a new company, or set up a new branch in any other location. So for that they need the fund. So that may be the reason.
Okay.
Or
Good, good. I
maybe
get.
the short term trading, if he do not want to own a asset or the security for long term, he can
Cover the
borrow
short
it.
position. I think somebody said to cover the short position. Yeah.
Okay,
Okay.
yes, yes.
Good, good, good. I guess so. All of you are pretty much clear with this SBL term. So, who all are the main participants, market participants of SBL?
So could you please repeat?
Who all are the market participants of SBL contract? Who all are the main participants of SBL?
Client custodian.
You said bank or custodian? When we say market participants, we want to say these are the major participants who participate in all the SBL activities.
Traders or maybe brokers or dealers, banks, market makers who used to just buy and sell, and they used to just.
Absolutely, yes. So normally, why do we call out? Why did we only call out these names? Why not adding other names, retailers and all that? The reason is just a minute. Okay. So why do we only say that these are the major participants of market, right, in the SBL? So bank, market makers, right, hedge fund managers, traders, broker dealers, mutual funds. What they do is they provide lending and borrowing services. So let's say if I am one of the traders and I did some short selling or whatever short position I have, right? And later on I realized, though I did a short trading, but in order to cover and fulfill the position, I might go at loss, right? And in the near future, the price of that particular security might go down again. So in order to cover that short position, I will go to my broker, and my broker will help me to arrange fund securities from other lenders. Those other lenders can be anybody, can be any individual trader who's willing to lend its securities. We may have market makers who help us in this buying, borrowing, and the lending of securities. We have our hedge fund managers. They also just make money by just borrowing and lending of funds. We have our mutual funds broker dealers, and they all are the main participants. They actually help us in the borrowing and the lending. If not all the time, if I want to borrow any security, right, of a decent quantity, I might not buy, get any individual to lend me those securities. So in that case, who will help me? I might reach out to market makers. Market makers are always available with their securities. Then we have our hedge fund managers. Hedge fund managers are there to make money by in the stock buying, selling, borrowing activities. Right, and that's the reason we call them the market participants of SBA. Is that clear?
Yes, sir.
Yes, no. Okay. So what sort of securities which are traded in SBL? Anyone please help me out.
Equities and
Equities,
maybe
one.
fixed income instruments. Let's say repo agreement maybe.
Repo, not now, not repo. One is
Okay.
equities, one is fixed income instrument, and
So government security maybe.
fixed income में आ गया ना.
Okay.
That's corporate debt obligations like corporate bonds and other securities, right? So these can be traded as your under your SBL. So let's say if I want to buy a number of securities, equities, right? I might not have equities, but in the place, in return of equities, I can just pledge my fixed income instruments, right? So that I could get my equal value of securities. All of you very well said that on these equities, one receives the interest or the fees, and the other one pays the fees, right? Why do we do that? One is keeping these securities idle in the account, not using for some amount of time. Instead of just keeping them idle, we can just use them in the lending or borrowing activities. In the lending activity, wherein one can make money and the other can also just make use of the securities. In short, this helps market to provide liquidity as well, so that no trade go fail because of the lack of the liquidity or lack of securities. So that is also one of the main reason for SBA, right? And then during the you would also have read all that all the SBL contracts are governed by the ISD, right? The when we say ISDA, what is the full form of ISDA, guys? Help me.
So can you repeat ISDA?
ISDA.
Okay. International Swap and Derivative Association.
International Swaps and Derivatives Association, right? So all the SBL contracts are led by the ISDA master agreement, right? When we say ISDA master agreement, uh, so now we all of us know, okay, what is the purpose of securities borrowing and lending? right? And why do we do that? Who all are the main participants? What is the benefit for one party to lend the securities, and what is the benefit for the other party to borrow the securities? Now we know this, right? Now, अभी हमें ये तो पता चल गया कि why do we do ISDA, why do we do SBL? But in order to execute these SBL contracts, there's a ISDA master agreement which is followed, right? And ISDA master agreement, now when we talk about the collateral management, right? So now SBL collateral management, we are linking with each other, right? As SBL, we understood why, what are securities, why do we need to lend or borrow securities, benefits, everything we talked about it. Now, in order to execute these contracts, there's a contract management team, right, that play a big role. Now, all the contracts are signed under the ISDA master agreement as per the ISDA master agreements guidelines, right? Now, in order to understand now what is collateral management, in SBL we talked about, okay, if I want to borrow securities, I should have a lender to it, right? Now, in the SBL, we are saying we are borrowing the securities with a promise, or one is we are borrowing the securities with a promise to just pay back in the near future, right? In return, we are also pledging some securities so that the lender is safe on the other side and they are least worried that the money is lost, right? And that is why, in order to ensure that when two parties are getting into SBL contract, there should be a third party who can help them to execute their contract by signing the ISDA master agreement. So far, किसी को कोई भी सवाल है before I proceed?
Sir,
Yes.
sir, if we make the collateral for this agreement, then what is the collateral amount? Is it equal to the total money that the
That's what we
borrower
are going to
wants?
discuss. That's what we are going to discuss. Right?
Okay,
So far, whatever we discussed, is that clear?
Yes, sir.
Anybody, any question? Okay, I'll take it as no. Okay. Okay, so when we decide to borrow something with other parties, so normally all my collateral management or all my SBL contracts are bilateral contracts. When we say bilateral contracts, these contracts are happening between two parties, right? And whenever we are saying that we are borrowing something or we are lending something, there is nothing free. In the banking world, there is nothing free. For everything, we have to pay something, right? So now to answer to your question is, let's say I need to borrow, let's say 1 million Reliance stock, right? The cost of 1 million Reliance stock, let's assume is 50 million, right? Now I want to borrow these Reliance stock of 1 million Reliance stock, which will cost me 50 million. Now, first of all, we have to decide, is it the equity or fixed income instrument that I'm borrowing, right? If it is equity, then the fluctuation and the volatility will be there in the market. And since it is an equity, so the lender will ensure that they get the high collateral as compared to the securities they are lending, right? Let's say if they are lending for securities of 50 million, so the borrower might have to just give them the securities of, let's say, maybe 55 million, maybe a 5%, whatever the margin rate they have to keep. Margin rate will be more than that. The minimum 5%, 4%, or 10% margin they might keep with them, right? So this is all decided as per their collateral management or collateral agreement, that what is the margin percentage. And tomorrow, if that margin percentage increases or decreases, so the borrowing party, they have to maintain the margin with the with the lender.
Sir,
Yes. Any questions so far before I proceed?
the collateral which have to be put by the borrower is mentioned in the credit support annexure or in where it is the document which carry these information is.
Uh-huh.
So is it
Right, that will be a part of your
CSA?
credit. Right, that will be part of your CSA. Absolutely.
Okay. Thank you.
Yes, when you would have read that ISDA, right? There are 4 sections of ISDA, right? One talks about your schedule 1, wherein which talks about all your credit support annexures, right? Then the confirmation definitions and the deed, right? So it will be a part of your CSA. Now, what are the features of normally if you talk about your collateral, what are the salient features of your collateral? One, you have your guarantee. So tomorrow, if borrower refuses to return your securities, you already have the collateral which you can sell and recover your whatever the lending that you do, right? Credit enhancements, yes. So since you already have the collateral, so this also increases the credit enhancement of the borrower. So tomorrow, if borrower wants to just borrow more money or more securities, the lender will not get hesitate to provide more credit to that person because all the credits are fully collateralized, right? And again, collateral, they mean again, in case of any crisis, this collateral management helps to just overcome the crisis in the economy. Okay, I'll just quickly share my screen so that I want to share some information. So let me know if you guys can see my screen.
Yes, sir, we can see.
Now, if you see the purpose of collateral, right? One, a money market investment lending for short period on interest on available cash of securities. One of the purpose of your collateral management, right? Money market investment, not money market instruments. This is money market investment. Balance sheet management techniques you use to optimize bank capital by earning extra income from lending excess assets to other institutions in need of additional assets, right? So one, let's say you are one of the financial institutes and you have your excess assets kept with you. Now these assets are not giving any value, not adding any much value, like giving not any return. So how you can just make money out of these assets? You can easily lend these and just get some return on that. An arbitrage opportunity. We all know what is arbitrage, right? Yes, no, maybe.
Yes, sir.
Okay. So when we are saying an arbitrage opportunity through the use of tri-party collateral transactions. So I know in one market it cost me, let's say, $10, and then in the other market it is costing me, let's say, $10.5. So I can borrow money from $10 and I can sell it at 10.5, right? So I will make profit, right? And whatever the profit I'll get, I will in the near future again I can just buy back at the same price and just return it. Just a minute, just a minute.
Yes, sir.
Hello. Sorry, I guess Akash, you were saying something.
No, sir. I'm not saying anything.
Okay. So arbitrage. So what we can do. So this is we also use this collateral management in our arbitrage facility as well. All right. Now, at the end, you will see manage crisis. It helps to manage and overcome the crisis like economic currency and failure of market participants. So, whenever you get in some sort of crisis like this, your market makers, your hedge funds, they borrow you the securities for a longer period of time. Let's say for 6 months, 1 year, right? And in return, what happens is, though in return they are getting their fees and the interest, whatever it is, but it helps overall. It helps the uh, market to it helps market to just avoid the collapse. So that at the end of the day, if we are managing or we are able to manage everything with the help of this collateral management. Now, when we are getting into our collateral management services, now what should be the asset that we need to lend? Yes. What should be the
So
fees that one?
the screen is disabled.
Yeah. I just know it. I was just with some other side. So, so normally, what sort of collateral that needs to be borrowed, right? Or what sort of collateral that needs to be lent? This is from the lender side, right? And what should be the fees and interest that we need to charge from them, right? And for how long? What is the collateral that one party will give to other party? For how? What should be the rate of it? What should be the duration of that? Right? What is the reliability of that security's volatility? Yes. Do we feel that in the last tenure, the securities which they are keeping as collateral, are these highly volatile, highly flexible, or is it just the very minimum fluctuation in the market? So all these things they have to keep in mind while getting into a collateral management agreement. Now there are various types of market. They use various types of collateral, right? You will see fixed income repo, collateral bonds, corporate bonds, exchange traded securities, asset ABS, OTC derivatives, equities, securities lending, bank loans, FX margin, and commodities. So these are all different types of collateral which are used by the various markets. Now you will see the key technical and the legal developments, right? So all these again, these contracts are under the IS under the governance of ISD and master agreement, right? So whatever the documentation these are needed, this has to be provided. Now they are simply asking the advantage of collateral. We already have discussed it. Reduce credit risk, capital market, increase competitiveness. So you are with your examples, you have already discussed, shared these examples, right? Improve market liquidity. Yes, this give me example of the market collapse, managed crisis. Access to high risk trades. How does your collateral management help? Let's say you want to just get into a contract wherein these are highly risky assets that you're getting into the trades for, you're trading for. In order to ensure that you know that if you will buy these securities, it will cost you and it will add risk to your trade as well. And still you want to make money out of these risky trades, right? So instead of buying the securities, you can easily borrow the securities. Though I know since these are the risky securities, that the rate of interest or the fees might be high than the normal rates, right? And so in that case, one party also gets an access to deal in the risky trades, because the more the risk is, the more the gain is as well. So like hedge funds, they do the trading in the higher risky assets as well, because they are ready to take risk. Now the trading between counterparties. So okay, the rest of the advantages are buy. Okay, so we all know what is the difference between buy side and sell side?
Yes, sir.
Can anyone help me out?
So buy side are the one who buy the data from the sell side firms to work on that and make the prediction. And the sell side firms are like investment bank where they do the research work and prepare the data.
Only the data part.
So the buy side firms are the ones that are involved in buying securities, such as mutual fund firms, whereas sell side securities are the one who engineer the securities and then sell it to the buy side firms.
So now these are the basic advantages for the buy side and the sell side. To the sell side, reduce capital charge to allocate for asset liability management, right? Because now they put it on the other side. And the benefit to the buy side, minimize collateral amounts by cross collateralization, because you are also just keeping some collateral with the lender. Minimize collateral movement and give take collateral on net basis. And the now they are saying on net basis now, but there's always a margin that they have to take. Now depends on what type of securities that they are lending or borrowing, right? And accordingly, the margin is taken care of. Collateralized exposure by client. So different types of clients would have different types of risk associated with them, and the this collateral agreement that helps them to do that. Okay. Disadvantage of collateral. It is important for all of us to know the disadvantage of that. Increases operational risk. When we use the word operational risk, we are simply saying wherein the manual intervention is done, right. Let's say the information that we put in the collateral agreement, right, is not correct. The one we discussed with each other, right? So let's say like third party relationship operate collateral process accurately, efficiently creates additional operational risk. I'll give you example. Let's say securities were supposed to be, let's say, for 1 million, but the typo error, we made it 10,000, and it was agreed and signed by both the parties. Now tomorrow when it comes to returning the assets, right? Now what is happening as per the agreement? It is 10,000, but actually it was lent 1 million, right? So there's a risk. The other party can easily just deny to pay the rest of the securities. Now, as per the agreement, this is 10,000. This is one risk, right? And second, securities. The securities which were agreed to be lent or borrowed, right, are not the one which are documented. Plus, there are other nuances as well as per the collateral ISD agreement. And the legal risk, how structured, document, and manage collateral agreements require specialized legal skills, technologies, and the trained staff. Again, since whenever we talk about any activity or operational activity of the collateral management, these are one of the niche profiles. Not anyone can go and just work on these profiles. So they need specialized staff. Not all the staff members are upskilled to work on this collateral management. So they need special qualifications, special trainings, and the experienced people, they are preferred for such type of roles. Because one side, this involves a lot of risk of financially and the legal risk as well. That is the reason. This also on one side, once we are saying we are able to make money, but on the other side, we are also calling out the risk as well. Legal procedures, priority risk, recharacterization. What is recharacterization, guys? Can anybody help me? Just simply read it from the slide and help me out. What is recharacterization?
So can the recharacterization maybe if one party submit some collateral and in the future did the value of the collateral is decreased, so at that point of time the borrowing party have to submit some other collateral?
No.
Okay.
When we say recharacterization, let's say today you use some collateral in your collateral agreement, right? And later on, as per the updated guidelines, regulatory requirements, that collateral became not eligible.
Okay.
right? So in that case, the recharacterization that has to be done, right? Enforcement risk, inactive CSAs. When we say inactive CSAs, so these are the agreements which are not active for a long time, right? Again, that also becomes a risk and disadvantage. What is concentration risk? As you have it in your screen, quickly read it and help you out. What is concentration risk? Anyone from the group? Guys, can you hear me?
Yes, sir.
Yes, sir.
What is concentration risk, guys? So concentration risk, simply when we use the word concentration risk, we use the term as uh, we are more dependent on one type of asset or one type of portfolio. So if that something goes wrong with that one portfolio or the asset, that right, the entire investment that goes for a toss. That is called a concentration risk. That is how, and that is why it is always recommended that we should always diverse our portfolio. We should not be highly dependent on one asset or one asset class. Let's say another example I can give you is like you are more dependent. So there are different assets that you have invested, but all the assets relate to one sector. Let's say any other finance sector, any other food, or any other manufacturing sector that you have invested, right? Any fluctuation in that particular sector will lead to your risk. That is called your concentration risk. Now, what are the different types of collateral normally which we use? Quickly, group, help me out. What are the different types of collateral that we use?
Some mortgages like homes.
Mortgage, one. Second, one is mortgage. Second, mortgage backed security. Second,
Asset
Government
backed
securities
government securities.
and corporate bonds and commercial paper.
Corporate bonds, yes. Commercial paper to be. Not the commercial paper. Okay. Cash, equity, real estate properties, right? You have your gold and other metals that we have.
So it can be asset backed security as well.
Yes, it can be. Today we have our mortgage-backed securities. So you all are aware of the concept of mortgage-backed securities and asset-backed securities, right? Yes, no, maybe.
Yes, sir.
Yes, sir.
I'm just quickly sharing the screen again. Just want to show you the features of collateral management. This helps in the risk management. In order to cover this, you can get into the collateral management agreement or SBL. Credit enhancement, capital adequacy, regulatory and compliance, operational risk, a repurchase agreement, and asset liability management. Now, can you please quickly help me? What is the difference between SBL and the repo?
So in the repo, only the government security act as a collateral. But here it is not compulsory that only the government security act as a collateral. Here
Come again,
we,
sorry, I missed you.
sir, in the repo, the only the government security act as a collateral.
Repo, okay.
So it is much more safe as well. And in case of this SBL, the security may be of government security, equity, and anything. It is not compulsory that this is only the government security which we act as a collateral.
Okay, good.
So I think also that they are over collateralized in case of the repurchase agreements. They're over collateralized.
But in over collateralized, that depends on the type of asset that you are getting or getting into contract for. If it is only the repo agreement, right, they only always and always go by the almost equivalent value, right, or maybe some margin of 1 to 2%, right. But in our SPL, that depends whether we are keeping the contract at the same value or depends on the type of security that we are lending or borrowing. Over collateralized depending on the market situation.
And sir, maybe repo agreement is only between the two banks.
Repo, yes.
So, and here SBL contract is there is no compulsion that the two banks are involved. They can be done
Yes,
between
they
a corporate
can
and a
be
bank.
tri-party, not only they can be tri-party. Now, what are the parties involved in your collateral management? So we are aware of the participants. We are aware of the participants, right? Traders, hedge funds, mutual funds, right? Investment banks. We have other many parties involved, right? Broker dealers as well, right? Now, but what are the these are the players, right? Market participants. Now, what are the different parties involved? So, difference between a participant and party. Participant are something like they are the major players, right? Now, when we are talking about the parties, what are different processes these are involved, like different teams. One, we have our legal team. One, we have our valuation team. I can just share my screen. So we have our legal team, valuation team, accounting team, third party services, collateral management, credit analysis, front office or trading office, right? Middle office. These are the different parties which are involved in a collateral management. Has any question so far? Yes, no.
No, sir.
Okay. Now, let's spend over 5 minutes to understand the overall process. So we must cover it, but just do a recap. It is good for not good, must for everyone to understand it. So, what is the process of this collateral management, right? So when we are creating a new relationship, right? New relationship or new deal in short, we can say, right? How identifying new client by the sales team. There's in every company, So there's a sales team. Their job is to create revenue for the company. They find out customers who wants to or who want to buy into the collateral agreements, right? Borrowing or lending, right? Then they help negotiate to enter into a new contract, right? So these are the third parties, right? They are helping them in the collateral management activity to by getting into the new contract, implement the new agreement. Now, the entire process is first you are identifying new customer. Now you are asking or agreeing with both the parties to get into an agreement. Now you are implementing an agreement. Now your initial collateral is exchanged. Now once both the parties are agreed, right, and they have signed a new contract. While signing a new contract, it is agreed that I will lend these securities and we will borrow these securities, and this will be the collateral, right? And that's how, because in the collateral management, the transfer of ownership happens on a temporary basis, right, as per documented agreement. But on the trading side, you actually have to transfer the ownership. My agreement says it is I am transferring these securities to you for a temporary period from this date to this date. As per agreement, it is a temporary transfer. But when you talk about transfer, when the trade happens, the complete ownership transfer to the borrower or and the lender both. This is the collateral. Is that clear?
Yes, sir.
Just in short, you just don't forget this one, the process. So there's a custodian. Custodian is a third-party service provider. They provide the clearing services, custody, clearing, and settlement services. In the process of this collateral management, so once we are saying the exchange of the uh, uh, initial collateral is exchanged, so that who will keep the collateral, who will do the provide the custody service, who will help in the clearing and settlement services. So it's custodian. Okay, I'll just share. What are the margin calls? So this is important for all of you to understand what are margin calls, margin mechanics, right? Trades to be mark to market. So whenever we are doing any trade, right, that has to be equivalent to the market value. I got into an agreement, let's say initial the securities that I collateral, the value of those securities are let's say 15 million. But later on, we have to do the daily evaluation. So then we analyze the value of the securities are let's say 49.5 million. So it is short by 0.5 million, right? So what will we do? The borrower will have to give the remaining margin to the lender, right? Again, this is your collateral, the same way your trade goes as well. Net collateral to be calculated internally. So there's an internal calculation, which is again, this service is provided by the third party. Normally, they outsource this service to a third party. They help them to calculate the value of collateral internally and what should be the margin they want to keep. Right? What is the credit risk exposure compared to predefined acceptable exposure level? So when we signed an agreement, what was the credit risk that we had? And as per the current situation, what is the exposure that we have? Right? Margin call is made if exposure limit exceeded. So I said, yeah, 50 million, 49.9 million is something, 0.1 million, I'm still okay. But if the difference goes beyond 0.1 million, then you will have to give me the margin, whatever the number amount it will. That's how it is margin call. Counterparty's net collateral calculation or margin call is acknowledged. So every time it is agreed and calculated, this has to be documented, right? And agreed portion of the collateral required is posted by the losing counterparty to the winning counterparty. Let's say If the lender says that तुमने जो securities दी उसकी value कम हो गई है, in that case the borrower has to pay it back to the lender. So losing party will be your borrower and the winning party will be your lender. The collateral posting settles T plus one because these are internal already discussed and agreed trades. So that's the reason these collateral postings happen in T plus one. Otherwise, the normal cycle is T plus two. Any questions so far? Yes, no. Guys, can you hear me?
No questions, sir. It's clear.
Now, guys, in this slide, so there are some of the key terms. Just ensure that you go through those key terms once. This will help you to just add your, when you are explaining any concept to interviewer or at the time of your final mock, this will really help you out. And at the end of this one slides, you will find some key terms which are used: call amount, leverage, margin, margin call, mark to market, model, and everything. You will find it there. Just ensure you go through once. Once you will pick it, I think these are self-explanatory. There's nothing much that you need to just spend time on. I guess that's all I had to do as a part of your revision of this your this SBL collateral management and KYC. Just wanted to check, guys. Do you have any questions which you think that you haven't asked, or anything which I haven't answered?
No, sir.
Okay, in that case, thank you so much, guys. Thanks for your time. Happy to just take this session. So yeah, you guys are active. Good to see that.
Thank
Have
you,
a
sir.
happy Sunday ahead, guys. Take care. Bye.
Thank you.
Thank you,
Sir,
sir.
attendance?
Thank you so much.
Thank you, sir.
Okay.
Hello. 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 Hello.
Akash, sir is not here.
Okay.